Welcome to Trading Lounge and the US indices for Friday, June 10. I know that I'm making it earlier, but I need to go to the dentist early this morning, and so yeah, apologies about making it a bit early before the market finishes. I don't think it's going to make much difference though in what we're sort of looking at, so I'm just going to go through everything pretty quickly. It's all pretty simple. So we're looking at wave 3. Well, I don't know where my wave 4's gone, but done a runner. Bringing back, and wave 3, 4 and 5 for wave 1. The alternative count for this is obviously that we've got wave C up here and we've got a big bear market at that point. Otherwise we're looking at from wave 1 here down to wave 2. So we're looking at the bullish counts first because if we were looking for trade setups, the bullish counts would come first. That they would be the first ones triggered. Sure, we can trade down here if you wanted to, but yeah, I don't see why not. So where that green line is to go along there, you can go, you put your stop at that point and go short. Otherwise, just back to the count, wave 1 here, an A and a B, and you could configure that differently as well. You could even put this wave A over here for that. But one of the interesting points here though is that this move here, if this was wave 1 here, then an A and a B and a C for wave 2 here, then it's quite a big wave 2 compared to wave 1. So it kind of takes away the bearish side of things a little bit. And as I mentioned yesterday as well, it's that, when this correction started, it was like when interest rate rises were first sort of mentioned, and I think that all got sort of built in, and the next really event along the calendar line is the earnings. So I think the focus is on the earnings, people trying to get some sort of idea of what that will be, and obviously spending habits have changed from electronic toys and everything for the house to changing to going out and partying now, so we have to look in sort of different places for different drivers, I think, but that's not my area of expertise. I'm just the Pat Pete, but and I even struggle with that. So anyway, as far as I can see, and and I'm looking at if you look at the stock video, the banks, they still need to come down further. So, I feel that these need to come down further as well. So it does appear we've got a nice 1, 2, probably 3, 4, 5 here for 1 and nice sharp wave 2. And then 1 here. I haven't really looked at that configuration just yet. But we've made new lows here, so it's creating overlapping wave structures. So in one way or another. So we should be still coming down into this particular space here before going long. So I was hoping that Friday would be a buying opportunity day and the whole thing would sort of get a move on, but it's obviously not the case, and it's going to take us much longer than expected, but that's how the cookie crumbles, and that's where we are at the moment with this, really. So wave 1 and wave 2, the simple explanation at this point is wave A, whichever way you want to configure this. You could probably even do it a WXY if you wanted to, but wave B, I like to keep things ABC if I can. And then 1, 2, 3, 4, 5 to move down into the 4,000 to test that, and there will be demand at that number. So yeah, anyway, we've got plenty of time to talk about the move to the upside in that in that case for that. And yeah, the next one, the Nasdaq, is much the same. So we've got wave 1 here. We can look at wave A is probably better over here actually, because this looks like an A, B, C here. So an A and a B and a C for the B wave. And then once again 1, 2, 3, 4, 5 for 1 and 2 and 1 and 2, starting to sort of open up a little bit, so it's sort of quite, it's sort of it's this is the likely sort of count, anyway, that's what I'm sort of thinking. And once again, you could bring this down to this level here, so any breach of that, and then that And you could look at this in another particular way in terms of a wave 3 over here with a wave 4 over here as a triangle pattern, or there's 2 triangle patterns you could look at in this, or you could do a few WXYs. And there's different ways you can count it at this point, and because it's not finished, it's not clear. It will be in hindsight, but because of the banks, I feel like, and also if I'm talking tech stocks, we can talk Amazon, then that needs to come down, Google needs to come down, Apple's, and so on, you know. So that's that, and the last one is the Russell, and I'm changing the count here for the Russell. So I'm just going to look at it as 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave for wave 1, and then a pullback down into 1800 here for wave 2. So where, you know, if the top gets taken out and I'm wrong, well, fine, we'll be long above that there, you know, but otherwise we need to look at this moving lower. And once again, from the top here with the other markets, we'd probably have to look at this a little bit differently, because well, you know, the other markets, we could look at this as 1, 2, 3, 4, 5 here, but we've got overlapping wave structures. But I have to say, when you're working around large numbers, people put their buy orders and stop orders at large numbers, which is not the right thing. Don't ever put stops on large numbers, because you will get like hammered. It's just not the thing to do. But anyway, I could configure this in different ways. It will support here for a while because it's the 50-60% at that point there. You could probably even look at taking that top out there if you wanted to, but I'll just leave it right out of the way at the moment. But yeah, so we need to come down further in one way or another here. How that gets configured, not too sure. Doesn't really matter too much at this point. As it unfolds, we'll see it in clearer light. But yeah, should move down lower. Okay, well that's it. So I'm going to leave it at that, and I'll see you in the next video. Alrighty, cheers.